You need to watch this before you ever trade on Robinhood again. So we've heard the stories of the Robinhood app, right? This new platform that offers free trading and makes the stock market available and interesting to the masses. And for most non-professional traders, when they want to execute a trade before Robinhood, it would cost you like $5 to $10 each time you did it, and that adds up. Robinhood was supposed to level the playing field between the investing haves and, the common have-nots. And for a while, it seemed like they were really delivering on their message. People were responding crazy positive to it. They were gaining users at an insane rate and just printing money. So for example, in 2020, Robinhood revealed they had over 13 million active users. Now it's expected to be closer to 20 million. And they were recently valued, kind of pre-IPO, at $20 billion. Let that one sink in for a minute. But how does a company that's not charging you make its money? The answer, they actually are charging you. You just don't know it. Is Robinhood really stealing from the poor to give to the rich? Let me explain. So I am John Rettinger. I've been making videos in the tech space for, at this point, well over 10 years with over 1.5 million subscribers. And during that time, I've made a lot of mistakes when it comes to managing money and finances, and I've learned a lot. And I want to sort of share my experience with you so you can be smart with your money and make it work for you. And sort of dispel the rumors that you need thousands of dollars to sort of build a nest egg and sort of make whatever money you have start to grow. Investing is something you can do with as little as $5 or $10. And the whole purpose of this channel called MoneyRush is I want to show you how. And we are a brand new channel, so if you want to support it, hit the subscribe button. We'd certainly appreciate it. Okay, so back to Robinhood. Let's say you've got a Robinhood account and you want to place a trade, and let's say buy 5 shares of Apple. You check the current price, make sure you've got that amount in your balance, and you place a market order to buy, and boom, you, sir or madam, now own 5 shares of Apple. Congratulations to you. You saw that market price, thought it was a good value, and you bought it. But did you know you actually didn't get that market price that you saw? So market makers like Citadel Securities, which has had their own problems the past few months, or Virtu, pay e-brokers like Robinhood for the right to execute your trades. So the broker is then paid a very small fee for the shares that are routed, which can add up to millions when customers trade as actively as they have, sort of, especially last year. So essentially, when a person trades on the app, Robinhood's going to send that trade to a larger entity, usually a hedge fund, which is going to leverage thousands of orders at once for a slight advantage. And then that larger, usual hedge fund entity then compensates Robinhood for their orders. So the price you saw of Apple at say $100 was actually filled at $100.05. So the broker makes the extra 5 cents per share and pays Robinhood for that privilege. So it's only 5 cents, right? Why should you care? Well, you are paying, in this hypothetical scenario, that extra 5 cents per share, and you're not getting the actual market price that you saw. All right, so we got that down, but the bigger question that I had is why would any company pay to execute trades for someone else? There's obviously gotta be something in it for them, or they would just get paid themselves. Well, turns out that when these companies receive orders from Robinhood, they're actually getting the best payment of all, yours and my information, and specific information on future trades that will happen. What that means is these companies can place trades of their own ahead of Robinhood users, and that's become known as front running. Robinhood was actually fined for failing to ensure that its customers received the best prices for their security orders, and this was a pretty big deal. So though Robinhood did not admit direct fault, let's just dig in a little deeper and look at some of the brokers in question, see if we can follow the money. So Citadel Securities, they received over half of Robinhood's total order flow, and it was fined $22 million by the SEC in 2017 for misleading their clients about how they price trades. Wolverine Securities, who gets 15% of Robinhood's orders, was fined $1 million in 2015 for failing to prevent insider trading. So these are the firms that pay Robinhood to place your trades. And that's how Robinhood can afford its commission-free business. But Robinhood did not come out unscathed here either. They were fined $1.25 million. But what does that mean to a company that's being evaluated at billions? It boils down to this. Never forget there's no such thing as a free trade. And I don't want to make you think that this is something illegal. This is totally legal actually. It's just not transparent. But like most things, if you know the game, you can be prepared to play. Here's what you can do to make sure that when you buy stocks, you're actually getting the price that you want. And it's very simple. Place a limit order. Those only execute once security reaches a specific price, and you're taking away Robinhood brokers' ability to sort of front run you, which means they're not going to give you that worst price. After all, they can't give you that bad price if you tell them exactly what you want to pay. And this is maybe a convoluted story, but it kind of boils down to you paying fees and paying prices that you didn't know you were paying. And Robinhood's not transparent about those fees at all. They're not transparent necessarily about the price you executed to pay. You get animated screens and buying stocks are really easy. But like anything in the stock market, or anything in the world, I guess, if you're not prepared and you don't know what you're doing, you will get taken advantage of. And so while this 5 cents might not seem like a lot to you, if you're placing a lot of trades day after day, year after year, that adds up. And you might be fine giving that money to Robinhood. Perhaps you don't even care. You're happy to pay that small fee to sort of get that commission-free trade. And I understand that side of it. But at the very least, you need to know what you're paying for so you can be educated when you make your trades.